my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of Paris rapeseed, Winnipeg canola, and Malaysian palm oil markets. I'll start with Paris rapeseed. There have been, as I repeatedly said since my annual review on Paris rapeseed back at the very start of January this year, there have been some big patterns in operation here. Let me just for a second refer to my commentary from the start of 2022, and I quote, "This leads to my final points. Since May last year, so this is May 2021, of course, we have formed a newer, much more acute bull channel. That's currently 682 and a quarter, 910 and 3/4. To me, it's super acute and thus unsustainable, but it is there and I will not dismiss it just because of acuteness. Well, what I initially saw as a super acute bull channel is still there, and I've transferred it and finessed it here on the daily chart, such that I see it now more as a February/April to date larger ascending broadening wedge pattern, currently 686 and a quarter to 916 and 3/4. That's rather than a bull channel. This pattern has been the outlying corralling, if you like, bullish influence on this market, despite what happened on a daily and even weekly basis. This pattern had been showing the way higher all the time until recently. In the past, there had been some moves up and over the upper trend line, for example during April, even trading a full weeks above and outside it. But, and it is an important but this was and is a monthly pattern we are talking about here, and we've not had 2 monthly closes, consecutive closes over it. We had only the one above back in April, and prices fell to close below the lower trend line in June. Yet we are here now, not only repeatedly testing the lower trend line, but looking like we may well have broken it. It is still not too late to call this a forced break lower, but it would also be remiss of me not to consider this as a proper break lower, even if we have as yet not had a single monthly close below it. Hence, whilst these are not targets as yet, if we do have such monthly closes below, then I'll refer to them as such. Potential destinations. Hence, a potential destination below would be in the 397.30 area. This is a huge ask of the market, but please bear in mind this pattern will need confirmation. It's long term. This is has always been a longer term pattern. So what can go wrong with this pattern? Well, I'd refer you to some of my comments from 3 weeks ago, and I quote, "I suspect that the overhead long moving average, currently 722.90, which had earlier proved to be little if any support, may now not only be resistance but likely significant resistance." And that's the end of the quote. The only other thing I'd suggest you look out for in the immediate future, apart from where the monthly closes will be, is the February low at 599 and 3/4. Winnipeg canola. For a number of weeks, prices tried to go down through the long moving average, currently 1020.80. But the market only managed it 5 weeks ago, and when it did, the fall was quite fast. I suspect this was due to the congestion from January and earlier between 945 even and 1037.70 not being as high a quality as they initially looked. Even the 50% Fibonacci lines at the January 21 to April 2022 move at 921.70 and the October 20 to April 22 move at 863.80 failed to stop the flow lower. Prices only really started slowing around the August 21 low at 817 even, and the congestion is just below that at 808.60. I also suspect the very acute broken bearish Andrews pitchfork for the late April to mid-May move, which I recently reinstituted and which has guided the market lower, also guided it from being even more acutely bearish than it already was. You see, I'm not a fan of acute or super acute pitchforks. But you can see that the lower time, currently at 7:05.70, stopped the low 3 Fridays ago, and the middle time, currently 7:31.40, managed to hold the market up 2 weeks ago, but only on the closing basis. Then last week prices started to be hassled from above by the descending upper time, currently 7:98.70, after the market broke up over it. However, the move up was forced by the upper time. It was forced by the upper time rather than freshly generated by price action pushing higher. And thus we saw a limited move higher, capped, interestingly, by the falling short moving average, currently at 815.90. This has been enough that the market is seemingly now starting to travel along the upper time, lower, but outside the pitchfork itself. Something I thought may be a possibility and I've seen elsewhere. It now depends on if prices maintain this contact with the upper time and what the reaction will be should prices drop to the lows of June in the 791 even area. See, if they halt, then we could have one of two possible patterns: possible double bottom or a descending triangle. I may even say a descending wedge. If they do not hold there, then we could see the action from early June to date form a bearish halfway hesitation type of pattern. Well, we shall see. Just remember, we still have the May to date downtrend currently at 870.860 sitting just above as resistance. Bursa Malaysia crude palm oil. After a stuttering start back in early June, the late April to late May bearish Andrews pitchfork has done a good job of guiding this market lower. Specifically, the market's desire to stay close to the middle time, currently at 39.82. Now, the upper time, currently 43.15, and the lower time, currently 29.51, have also played their part, more recently by guiding rather than being tested, though this week we have seen the upper time being looked at closely. Originally below, we now have the market, well, we have the unusual, well, support, I guess you'd call it, of the big old head and shoulders neckline from the September 2015 to November 2017 move. That's currently at 37.82, being tested and giving way, but then the market's struggling to get away from it. We next have the June 2021 low at 33.26, the January 21 low at 32.50. But I suspect they may not be as powerful as their monikers suggest. The reason for this is that just below both of these, we have in the 28.50 area target X, the potential target for the June to date bearish halfway hesitation. Only a proper break, and I mean a proper break, of the upper time would allow even the opportunity for this market to try and go sideways. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Service International Limited. Here comes the final bit.